Hello, hello, and welcome to November 16th. Alphas lead with CVX at 136%. Let's go to the chart. There it is, 136 for CVX. That is a last bar low. And imagine we were down here at 75 just yesterday. Boom, right there. It happened overnight. Now, here is also an interesting point. CVX only owes us 539. We are at 832. Anything above 539 plus cost of the commissions on one contract, that means we need to clear 541. We clear 541 or better, CVX will have returned all the losses and with a little bit of contribution to the buying power, and gets moved off the loss leaders list to the winner circle for the alphas. Well done, CVX. Let's go on. So that puts us in scoring position for 1 extra point for the alphas. They're sitting now currently at 14. So now here we go on now to Walgreen. There it is. Walgreen also hit last bar low. It was another funny one that we were struggling with the last couple. I mean, look at this. We were struggling. Look at that. Look at that right there. We were struggling, but we got in, and we're doing good. We're doing good. So here we are with last bar low for Walgreen. Right there, it is a small shooting candle. That is a small shooting star, very small. Someone don't even consider it. Flat bottom, they call it flat bottom spinning top too. The bottom line is that we are here at the exit for 43.27, and we're looking at a possibility of around maybe 850 on the pullback. So we get 850 against 2156. That will reduce the owed down to somewhere around $1,200 for Walgreen. That said, let's go on now to our third person, and that's XLB. I'm sorry, SLB. I'll get it right yet. All right. This is some kind of drilling company. Some friends of mine are in the oil field, and they talk about this company. We are only running at 25%, so our stop is still down here. Now, if SLB is able to close higher and near at 30 or plus, it will then initiate a middle exit rule, which will then take us to the 30-day moving average exit, and the warning track will then disappear, and we'll track it off that way. So that is it for SLB, and that's 109 against 48.76. So we have a big nut on SLB. Going on to Raytheon. Here at Raytheon owes 896, and we're at 275. Not much there, but we are past the entry point. We are now starting to track it on this, so we are in scoring position for another point. So that gives us 3 possible points for the alphas to take him to 17 points over the Tigerss 11. And remember last week that the Tigers were beating the alphas in performance, and they were getting very close in scoring position to overtake the alphas. And now the tables have turned. The alphas are now leading in performance and now leading in points. So that is the nature of the business. That said, let's go on to the Tigers. And here at the Tigers, we have IYR. Now, IYR is the ETF for real estate. At Online Trading Academy Mastermind that was attended this past Sunday, the discussion was about the forthcoming possibility of a real estate crash. Mark Moss talked about this back in May of 2019. Courtney Smith just talked about this about 2 or 3 weeks ago. And what is possibility is the real estate crash about? The mom and pop rentals, they're the ones that are hurting. The big corporations own the mega complex apartments. They got deep pockets, so if their cash flow starts to shrink or dry up because of people not employed and nobody able to pay their rents, they have enough deep pockets to survive and keep on going. These mom and pops do not. That is your ones who own the quadplexes and the 6 and 8 court bungalow apartments and stuff of that nature. They're hurting, and they're hurting big time. And the crack in the situation will be this: A lot of 401ks start being drawn out to survive. Even single family homes are in that danger, but not as deep as the mom and pop rentals. That is the first crack on the wall. If the withdrawals continue, the result will be is that the pension funds will have less money to acquire more positions, and the pension and the portfolio managers still have to deliver cash to the pension funds so they in turn can still put out the checks to the on the monthly pension. So it's going to be back to the same situation that I discussed. The economic cash flow wheel is in a possibility of getting broke again. Pandemic getting now rising is adding an extra, breaking another spoke in that wheel. So be on alert to getting strong possibilities of getting into some puts. That said, IIR is at 62%. It's got its 30 ROI trigger, and it's at here at the black price channel. That takes us on now to Verizon, and Verizon is here at 1% at 1.8%, and it's down here at the green price channel, and there's no possibility, no movement as of yet. Going on to Edison, we have Edison now at 1%. At 1%, we have here 1% is still at price channel down below. And then Pepsi just joined us finally after all the negatives that we've been going through Pepsi for the last couple of weeks. We now finally got some action where Pepsi now is making its move above. And look at now what's causing this. We got great movement here. Another lesson: bad fill. We were anticipating a 719 fill. We got filled at 950. The market makers hooked me. Now, this happens. You're not going to get all the fills. You're not going to get your all dream fills all the time. Lesson here: you have to have enough money in your account so you don't get if you have a margin account, you got it covered. But if it falls below, then you're going to be paying money up front. If it's cash, then the order gets rejected. So that is what happens when you do an order. You got to maintain some kind of extra buffer in your buying power to be able to cover this kind of slippage. This is called slippage. All right. That said, for Pepsi, that is a conclusion then of the Tigerss Report also. So with that said, we're going to close out today's report with the November 16th Alpha's new leader, CVX, at 136%, and the Alphas are in 3 scoring positions to possibility take their score to 17% possibility by the end of the week or maybe early next week. And with that said, I thank you very much for stopping by and checking it out. Be well. Take care.